Horlicks Network 18, Mission Poshan, Bhavishya Roshan.
Okay guys, there is a recovery that we are seeing in the markets, and the recovery is quite a bit actually. The Nifty is back above the 10,000 mark, or just about. The Bank Nifty has actually moved into the green, but you know, it's feeble compared to the kind of falls that we've seen. This is still a market that is in the grip of the bears. I guess, you know, just some amount of short covering, but quite a bit of jagged edges is what you're seeing, Surbi.
Yeah, absolutely. Banks have recovered quite a bit. That's where the recovery is really coming from. That's helped the Nifty's case. Let's pull up some of the counters. Cipla, beyond the banking names, Cipla is doing good now, 4% up. And then your HDFC Bank, the HDFC twins have moved. Let's pull up the intradays on both of those. That's pretty much leading to perhaps it's some shorts that are finally covering ground. In fact, good time to go across to Ashwani. Ashwani, even intraday, this is kind of, you know, whipsawing a lot. So those who had short calls in the afternoon on the index, advice to them, and of course, ideas for the last half hour.
I had said in the morning that today will be choppy and sideways. This is just that. So nobody should think that, you know, we are heading up, etc. But again, because, you know, short selling became so consensus, there's just kind of, you know, some profit booking on those shorts. Also, a lot of NBFCs, housing finance, etc. got hammered the last 2 or 3 days. Some recovery is happening there, so HDFC, Manappuram, etc. going up. On Biocon, nothing falls 18% for no reason. And apparently you have good news on Biocon. So let's be clear, Biocon is going lower. So to say that this is, you know, some profit booking is erroneous. 18% from highs, you need somebody to sell large quantities. So having said that, Biocon is a sell with a stop of 620, target of 575. OIL is a sell with a stop of 219, target of 205. And Manappuram Finance is a buy with a stop of 100, target of 113.
Okay, Mitesh, what about you? What are you buying or selling now? I mean, it's getting very, very volatile by the minute, but what do you have for us?
I think choppiness is clearly there, but the bias remains on the negative side. So I still have 2 sell calls. STBT on Repco Home with a stop at 568 for targets of 542. And Relinfa, I think it's recovered a bit. I would have wanted to see the stock kind of trade below the pivot levels. So if it starts dipping below 411, go short with a stop at 421 for targets of 390.
Okay, so more short ideas coming for you. In the mid-cap market, some pullback. You can say we were almost down 2% at one point in time. Now it's 1.5%. However, you still have plenty of weakness all around. Not too many names that you can spot on the upside just yet. Anand, you know, there have been plenty of stocks that have been battered. We've seen severe sell down on, for instance, on CG Power. We've discussed IT already. Anything else? Anything where you have conviction, and I'm not talking from a short-term perspective, even for 6 months, at least a year. Portfolio buying, anything that you'd recommend?
Well, I wouldn't like to recommend, because most of the recommendations I would have are meant for very long-term kind of buyers, and it doesn't make sense for this audience. The reality is that, as I said, my own view on the near term, and when I say near term, even in the next 6 months, is that the market is not going to go up. So you're going to be in a kind of downward biased market with perhaps bouts of severe falls followed by some correction upwards. And the tendency is likely to remain there till pretty much, we are near the election period next year. So therefore, for anyone looking to be buying at this time, your time frame has to be significantly more than 1 or 2 years. And I don't know whether, it makes sense to recommend for that kind of people.
Okay, let me ask you a follow-up. Consumption, obviously, market's darling area. A stock like Tata Global, it's well off its highs. What do you think of it now at current valuations?
Well, valuations, Tata Global is not something that has done the kind of earnings growth that should be, or even the ROE that should be there for most of the other FMCG companies. So to compare the valuation of Tata Global with, let's say, Hindustan Lever or anything of that sort, would not give you a picture in terms of where it should be, because you have to just look at the ROE and see where that is going. Does it have potential? Absolutely. All consumption in India has potential. The question is that already priced in? And I would argue that for most consumption companies, and I'm not specifically talking about Tata Global, they have priced in the next generation of growth. So, you know, it has to be one of the areas which has to, if the market has to fall, it has to be one of the areas that will also give up.
All right, well, stay on. We'll just come back for more. Let's also get you some market opinion. We did speak to Rhythm Desai of Morgan Stanley earlier in the day, and he does believe that this could be a market that will consolidate in the days to come. He has been a bit worried about the mood that the FI community has had. He says FIs have been very disappointed with the way India has shaped up. Listen in.
Foreign investors have been pulling money out of India. Their overweight position in India has declined. We're at 2011 levels. They're still overweight, but it has come down significantly. So you can tell that they have been persistently disappointed by India's lack of growth, and they're stepping aside. So I don't think I expect to hear anything different. Investors continue to be focused on bottom-up ideas, but on a top-down basis, I think they're finding a lot of other markets attractive, and therefore India has kind of underperformed all through 17. It has gone a little bit up and down. Surprisingly, in the month of May, and counterintuitively, India actually outperformed emerging markets.
You know, this earnings growth, I mean, Lata was asking you about the earnings trajectory. This earnings growth of 15% has been a mirage for the longest time. Everyone starts the year with a 15% projection and then scales it down to single digit by the time the year comes to an end. You think this time would be the same?
So see, Sonia, that is what happened in the late 90s and early part of 2000s. Then again, it has happened for the last 7 years. We've been in a deep earnings recession. This has been the worst earnings recession in India's history. The drawdown in earnings from the top to the trough has been in excess of 20%. That exceeds previous earnings recessions. But also remember that between 2004 and 2008, analysts started the year with a forecast of 15%, but we got 30%. So, you know, I think history tells us when the earnings cycle turns, we will underestimate the earnings. And when the earnings cycle is going down, we tend to overestimate earnings. So we've been in that kind of pattern for the past few years. Our view was 2 years ago that we may have hit the trough of earnings, but then we got hit by the impact of demonetization and then a little bit of the impact of GST, and so that view has really not panned out. So, you know, we are also guilty of having overestimated earnings. I feel now we have kind of come to a bottom. Revenue growth has been accelerating for the past 6 quarters. Even for this quarter, the revenue growth for various cuts of the market is somewhere between 12 and 15%. So that's a very robust revenue growth. What's not happened as yet is that margins have not recovered. Bulk of this pressure is in the corporate banks. So if you X out the corporate banks, then I think earnings have actually inflected already in the upward direction. It's the headline number that is still a little bit short of requirement. But the underlying momentum, I think, in growth has turned.
Do you think then this could be the year of reckoning? You know, the year when people underestimate and things fire up, simply because, you know, the Reserve Bank's recent circular forces the last gush of dirt from, you know, corporate lending banks. As well, you know, as you pointed out, the fourth quarter clearly showed consumption uptick, which was beyond many analyst expectations.
So see, Lata, I think growth is actually shaping up quite well. Government investment is approaching all-time highs. Consumption, as you rightly point out, has recovered. We're seeing a recovery in exports, and that has sustained for a while, and global growth seems to be in good shape, so there's less to worry about exports. And finally, our view is that the private capex cycle is also about to turn. We just completed a survey of 200 companies, and yesterday we published a report which suggests that going forward into the next 12 months, private capex will actually recover. And in fact, corporate sentiment, and we've been doing this survey for 6 years, is at its best that it has been in the last 6 years. So companies are actually quite optimistic about their prospects over the next 12 to 24 months. They've seen capacity utilization rise. They're expecting capacity utilization this year to be 83%. If you add another 6-7% growth, you go into the 90s. It takes 2 or 3 years for new capacity to come on stream. So very soon, on the aggregate, companies will be struggling for capacity. So they will have to put capex into place. So I would think that all the growth drivers are in place. The point is whether profits start gaining share in GDP. And again, I'm probably going of the view that maybe it has, and we're hoping and expecting that earnings growth will turn.
Year to date, across the curve, 1-year CPs or even 1-year G6 to 10-year, 30-year G6, yields have risen by about 140 basis points year to date. Is this very painful, or will growth overcome this as well?
So Lata, one of the striking differences between the rise in yields in India versus say the US until recently was that in the US the yield curve was flattening. So the short end was rising faster than the long end, and in India the yield curve was steepening. So the long end was rising faster than the short end. And that I think suggested that the bond markets had started to believe that growth is back, and maybe there's a bit of inflation risk as we go into the second half of this year. That's not necessarily a bad picture for equities. What happens is that when this inflection point takes place, there is no doubt some volatility, which we have been experiencing for a while now, and the market is digesting these higher yields. But per se, I don't think higher yields are negative. The reason behind rising yields is more important. In 2013, when yields rose, it was because India faced macro stability risks. That was bad for equities. Today, it's not because of macro stability risks. In fact, I would actually opine that macro stability in India right now is quite the best it has ever been, which is why we are not so perturbed about rising oil from a macro perspective. The stock markets may worry about it, but I don't think it's such a big macro risk.
So yeah, there is a bit fight back in the mid-caps as well. That index is now down to 30 points. It's quite a bit of recovery. But then is it really counting? So stocks like DHFL, for instance, they have rebounded from the lows of the day. Look at a Nalco. There's some buying coming in over there. Something like Arvind, pull up. Yeah, so that's DHFL. Sharp rebound in a couple of these stocks. Arvind would be a case in point as well. There's some buying on Avenue Supermarts, but it's still negative. So there is a fight back. I mean, that whole hunt for value that we've been speaking of, it is really underway. Nifty also trying very hard to get back to the 10,600 level. Well, tomorrow is also a critical day for this market because we are anticipating the next policy decision from the Reserve Bank of India. So what does the CNBC TV18 poll throw up? What is the street indicating? We've got Ritu Singh joining in with the findings as always. Ritu.
Well, you know, if you look at all the parameters that RBI uses to decide its rate decisions, it's, you know, in poker terms, what they say, all in, whether it's rupee depreciation, whether it's inflation rising, whether it's growth increasing, it looks like RBI is set for a rate cut. But the big question is when that rate cut will be. Will it be in this upcoming policy? At least our respondents believe that this time around it will be a status quo, but all of them believe that there will be a rate hike in this calendar year. We asked our respondents how many cuts they see in the entire calendar year 2018, and 80% went on to say that they believe that there will be a 25 basis point hike, and 20% even went on to say that there could be 2 rate hikes of 50 basis points. We also asked further whether, you know, there would be any action on statutory liquidity ratio. 80% believes that there will be a status quo, but, you know, the interesting returns have come out on the macro parameters with growth really accelerating in the fourth quarter, and that is also something that may propel the RBI to move its hand on the interest rates after 4.5 years. 100% believe that that growth rate of 7.4%, which is seen to be quite high, will be left unchanged this time around. As far as inflation is concerned, do remember this is the key concern of the central bank, something that it has been watching, and the last reading of the inflation has been above what the RBI has been targeting at 4% over the long term. So 70% say that in the first half the inflation forecast will be left unchanged, but half of our respondents say that for the second half of this year, inflation target for 4.4% will be raised from its current level. We also asked our respondents what they make of the RBI's tone now, given the threat to the rupee, which, you know, was the best performing Asian currency last year and now is easily by far one of the worst performing currencies. Inflation, you know, has a threat because of the rising crude oil prices. Growth has been strong, so there's no doubt that RBI's tone will be very hawkish, whether or not it cuts interest rates actually tomorrow. Also, you know, compared to the previous policy policy, it will be also more hawkish, obviously acknowledging all the risks that center around that inflation. And do remember, before we close, in the last MPC minutes that came out, there was a very clear indication that the members were turning very hawkish. And perhaps the most interesting bit was RBI Deputy Governor Viral Acharya, whose comments seemed to indicate that in the next policy, he may just vote for a hike.
Okay, yes, so be ready. It could be a close call. You could get a rate hike for the first time in 4.5 years. By the way, the Nifty has moved up from the lows. 10,550 was the low, and then now we're back closer to 10,600. So as you can see, a lot of volatility coming through. But emerging markets, how does it stack up here on? Let's listen in to what Jonathan Garner of Morgan Stanley had to say.
We think we're nearing the end of a global economic upswing that in this case has gone on for 9 years, and we also had one almost throughout the 1990s. So if you look at the way that we come to the end of the cycle, we've got tightening of monetary policy in the US and China, the two largest economies, tightening policy at the same time. We've got the oil price starting to really act as a headwind to growth, and we've got quite high equity valuations as well. So that's very similar to the 1990s, particularly in big cap tech.
I was looking at a note, and it very clearly says that the upside is capped for EMs, including India as well. Today you wrote a note that now maybe you're seeing a bit of a pullback into the emerging markets. Tell us what do you think right now EMs are, and how much upside you can see from here?
Well, the EM index peaked at 1270 in the last week of January, so shortly after we wrote our year ahead piece. It's fallen almost 12% in dollar terms since then, so it's had a pretty meaningful correction. So that leaves it about 3 or 4% upside to our current target. So tactically, it looks a little bit more interesting, particularly as the dollar is not so well bid here. But strategically, those issues that I mentioned previously, they're still with us, and that means we do have to be very careful in positioning in the market.
I'll ask you about global macros and crude and everything, but first on India, you've reduced your overweight on India by good 150 bips since the beginning of the year. We've already seen a bit of correction, not in the index level, because at the index level, India is just down 4% in dollar terms, Y2D, but there is a big correction in the mid cap and small cap. Your reading on the markets and overall pressure on the mid cap and small cap.
Yeah, so if you look at India, it is still an overweight for us. So it's not as challenged by some of this macro environment as some of the underweights that we've had this year. But you have got that higher oil price in a country which does still run a large current account deficit. I mean, it's not as big as it was, but it's large compared to, say, many other countries in Asia that actually run surpluses. And so we put it in a group that maybe includes Indonesia, that's had to hike interest rates at the end of May. We've obviously got an RBI meeting ongoing now. So it's nothing like the 2013 taper tantrum when India's macro position was worse. For example, inflation was much higher in 2013. But there is that kind of, let's say, tendency that pushes rates up, whilst the cyclical recovery is still quite young here. And again, that maybe comes back to the SME point that you make. For SMEs to do well, you need a really fully fledged cyclical recovery rather than the nascent cyclical recovery we have. But when you put it all together across the whole index, and we do like some of the mega caps here in India, it still ends up as an overweight, but not a large one.
Within IT, Jonathan, if I remember correctly, you have TCS in your focus list as well. Beyond TCS, are you bullish on the mid-cap IT as well? Because that's where you've seen massive rally in the last 2 quarters.
TCS is a name that certainly has been highlighted by our analyst team. We don't in our group tend to look so much at the mid and small cap names in India because our institutional clients tend to be more focused on the larger cap names.
Sure. You spoke briefly about being underweight on pharma, and we've seen most of the pharma stocks in India corrected and pretty much at a 52-week low. Are you getting a sense now that this is a time to now at least bet on few large pharma names, or are you still being underweight?
Well, the healthcare sector globally is a very interesting play on demographics, but the Indian firms have had this very strong niche in generics, and some of what we've seen is really regulatory in relation to the FDA issues that some of the firms have faced. And our judgment is right now that we probably would still keep that sector somewhat on a cautious bias.
So it's a fight back, all right. The Nifty Bank is almost flat. It was slightly positive as well for a while back. But the sum and substance of it is that it's been a choppy day and we haven't really made any headway on the upside. Devang Mehta of Centrum Wealth Management is now joining in. Devang, this mid-cap carnage, that's what we've been asking all our guests. What have you made of it? And would you start going out buying now or would you wait?
Good afternoon, Surbhi. Thanks for having me on the show. I think the answer is a bit yes. If you consider some of the mid-cap stocks, what we have seen across in the last 10-15 days is a greatly polarized market in terms of its construct. So if I can say, if you have TCS or HDFC Twins or Reliance or L&T, your portfolio is in good shape and color. But if you have any of the mid-cap or small-cap stocks, and that too, mid-caps and small-caps which I'm talking about are stocks which have great earnings potential, or the stocks which have delivered quarter-over-quarter in the last 4-5 quarters in terms of the volume growth or margin expansion or whatever parameter you put into play. Also, the quality mid-caps have sort of corrected big time, and this is all double-digit correction that I'm talking about, more than 15, 20, 25%. Yes, my answer would be, if they are quality mid-caps, quality small-caps which have corrected, they have the potential to probably give you earnings compounding stories of 20-25% over the next 2-3 years. They should surely be bought into, or at least should be looked at as a list which are going to be accumulated over the next 1 or 2 quarters.
Okay, Devang, hi, afternoon. We have the RBI policy tomorrow, and there's a rate hike that's expected after almost 4.5 years. Whether it comes through tomorrow or in the next policy, funding costs have risen quite a bit, especially for NBFCs, etc. Are you cautious about on this pocket, banks, NBFCs, or would you buy any stocks here?
I think, Sonia, yes, we are very clear in our approach over here that we would be more or less inclined to buy some of the large private banks which are continuously garnering market share from the PSU peers. Also, few mid-cap banks, again, which are trying to get sort of an emerging leap into that CASA space or the retail space. They are also on our hunting list. Plus, NBFCs like the consumer NBFCs like Bajaj Finance, again, not suggesting that to be bought, but something like that which have delivered stellar number in terms of their NII or NIMs. Those are the other wish lists, if I can say, which one needs to focus on. So some consumer NBFCs, insurance companies, of course, if I can put it into that NBFC space or the BFSI space, those are the spaces where a lot of money is to be made still on ROE expansion or sort of a good emerging dynamics or demographics.
Okay. By the way, so the financials are fighting back, including some of the marquee NBFC names. So Bajaj Finserv, big surge along with its twin Bajaj Finance. Let's pull up both of those stocks. There is some resurgence in Tata Steel as well, by the way. You can see that sharp recovery coming in. Ashwani, what would your thoughts be on some of these NBFC stars? I mean, is there any sense of thinking long trades at all now? And would they fit the bill, or are you just best placed looking out for short ideas?
Long trades as in right now, because they've rallied $10.
Now I'm talking from tomorrow's point of view.
See, you can't, box in everything into an NBFC category. Obviously, Bajaj Finance, Bajaj Finserv, etc., they will move up, they will hold on to whatever gains they have. But, it's the smaller guys, particularly housing finance, etc., which are going through pullback rallies. So it's not moving as a homogeneous kind of play. The better quality NBFCs have held on. Chances are they could even rally post the policy. But that's where you should be trying out, because mid caps, if nothing is wrong, even then they fall. So it is just a category market cap. If you stay with large caps, you remain safer. But as we speak, a lot of NBFCs are moving higher. Maybe they've discounted a rate hike, etc. So stay with the larger stocks.
Okay, stay with the larger stocks. Yeah, Bajaj Finance, etc. are, stocks for all seasons, I guess. So even when they fall, they are lapped up quite a bit, considering the wealth that these stocks have created. But we just have 2.5 minutes to go. So Ashwani, as a positional trader, or for a positional trade now, what would you do? 10,600, we've barely scraped through that today. From here on, what would the advice be?
See, as far as the market overall is concerned, there shouldn't be any doubt that with 260 advancers and 1,400 decliners, it's still negative. And, this year, it's not a question of moving average, because moving averages work when there is a trend. This year is sideways, 10,000 to 11,000 and back to 10,000. So that's the way to play it. Around 10,000, try to buy stuff, and you'll probably get somewhat of a pullback rally. Around 11,000, 10,900, sell, and market will find reasons to fall. So that way, if you're a positional trader, I think the downside is still open. Yesterday's big negative 1,000-point bar on Bank Nifty, I think that was the nail. in the financials coffin, and it will not cross yesterday's high in this round. So if financials are weak, IT is giving up, and mid caps anyways are down. So then there's very little to pull the market higher other than our Reliance, which I don't think alone can do this. So my sense is that we should be decoupled with the globe and possibly underperform it in a fairly major way.
Okay, all right, gentlemen, just about a minute to go before the day closes out. And again, it's been a tough one. Yes, the saving grace is that we aren't closing at the lowest point of the day. And yes, there is some buying that's come back in mid-caps, particularly in some of the NBFC stocks. So the cut is about 1%. Pull up the intraday graph of the mid-cap index. That's the index, mid-cap and the small-cap index. Those are the indices to be looking at today, because that is where the problem in this market really lies. Again, let's get the Nifty. I'm waiting for the mid-cap index to come up, the intraday graph, to give you a sense of the kind of volatility that we have seen in the market today. So there's some recovery towards the close. Anyhow, talking about the major movers and shakers today for the Nifty on the way down, you had to count a couple of big stocks, including some tech names, the likes of Infosys, HCL Tech. These were on the way down, TCS. So large cap tech was definitely coming under pressure. You had more losers in the form of a Z Entertainment. Titan has been seen very, very consistent selling, and that didn't change today either, 2.5% down. Then there was L&T to keep the company on the downside. Stocks like M&M also feeling the heat. Banks very, very mixed today and extremely choppy. On the Nifty Bank, we were all over the place. The index is ending absolutely flat. Individual stocks, again, you'll find them on both ends of the spectrum. The HDFC Twins managed to recover. That was a good part of trade. In fact, towards the close, HDFC Bank up about 1%, as was HDFC, and that's why you got the big recovery on this index. SBI was along the flat line, but then you have the likes of an ICICI Bank, for instance, which was still weak. Axis was still weak. Some of the other private sector names continue to drag their feet. Where else was the weakness? The likes of an Asian Paints, ITC. These were stocks again on the weaker side. Apart from the banks, there was some recovery on the marquee NBFC names. For instance, the Bajaj Twins, so Bajaj Finserv and Finance, they managed to recover lost ground. And some of the auto names we've had, I mean, that's been the one silver lining in the last couple of days in terms of news flow. So auto saw some buying, Maruti being case in point, about 1% higher. Last but not the least, do count in Reliance Industries as well, that kept batting for the bulls and ensured that at least towards close, we managed to regain 10,600 on the Nifty. But the story really in this market is not about large caps. It's all about mid-caps, Sonia, right?
Absolutely. The mid-cap index has been falling day after day. And today, a lot of these ASN stocks fell quite a bit. In fact, if you look at, the mid-cap market breadth, almost 1,900 stocks on the declining side, that will tell you a clear picture of how the pressure continues there. All your vulnerable names, HDIL was down more than 11% today. Idea Cellular down more than 10%. Biocon, despite good news there, down about 8%. Just Dial down 5%. IDBI Bank, Bank of Baroda, PFC, IDFC, the whole financial space under pressure. Funding costs have been on the rise. Indiabulls Real Estate, JP Associates, HCC, Suzlon, all down about 1 to 4%. Not looking good at all over there. And a couple of these other names, Union Bank, PNB, etc. Even sugar stocks came under pressure. Started off well, but ended down almost about 0.5% for the likes of Sri Renuka, etc. On the upside, Federal Bank was not too bad. You had DHFL that was in the green. Sale was just about okay. And DLF2 was holding up just marginally. But otherwise, it was quite a weak day for the mid-caps. Now if you look at it, this year, the mid-cap index has lost almost 14%, while the frontliners are absolutely flat. So big underperformance coming in from the mid-cap.
Oh, absolutely. So the pain really continues for this part of the market. Let's take in final words from our experts as well. Quick word, Mitesh, how would you approach trade tomorrow? There was some sense of buying coming back on some financials, couple of mid-caps. Tomorrow's also policy day. What would your advice be?
I think for me, the key was that the bank nifty kind of recovered, managed to hold on to 25,950. Tomorrow being the policy day, I think if we start breaking below this 26,000, 25,950 zone, I think then a fresh short trade opens up. Otherwise, you wait for this pullback to play out slightly more. But the broader direction with choppiness remains on the downside. So I would be more prone to take short positions, either on a breakdown or if some kind of pullback plays out tomorrow.
Okay, fair enough. Devang, final word of advice from you. Any stock ideas that you'd like to share at this point?
I think not stock ideas exactly, but some sectors which seem to be the pockets of strength, not in terms of technical formation, but of course in terms of the fundamental strength or the earnings recovery which we have seen in the past few quarters. We like autos, particularly four-wheelers. Of course, they have delivered stellar numbers, not only in terms of their monthly sales numbers, but also sort of their quarterly earnings as well. So autos is one sector which we would like to put our money into. Building materials as well as IT is where again we have seen a bit of traction as well as the recovery in terms of earnings, and this can continue over the next couple of quarters as well. So I think these 2-3 sectors are on our watch list, which again on any dip or on any substantial correction one needs to sort of get built into in the portfolios.
Earlier today, Anshu Sharma caught up with the Power Minister R.K. Singh and asked him to elaborate on the SBI REC scheme for NPAs in the power sector and what is the proposed format of the resolution. Take a look.
You know, the SBI scheme is called Samadhan. So they are addressing those assets which are complete or near complete. And the idea is to carry out an assessment as to what will be the sustainable debt for these assets. Then the remaining debt, which is unsustainable, will be converted into equity, which will be held by the banks, the lender banks. About 24% will be allowed to remain with the promoters. And then the banks will bid out this equity to people who want to run these plants. The idea is that these plants will be run. And the idea is that the valuation which is achieved would be somewhere near their true valuation. That's the objective which we have. Now, what we don't want is for valuable assets which were constructed at, let's say, 5 crores, 6 crores, 7 crores a megawatt should not be sold off for a crore a megawatt. That will be a windfall for anybody who buys it. The REC scheme is also a variation of this. Now they propose to form an SPV which will hold these assets and run these assets till the situation improves, which it is improving. The demand is growing up. It will continue growing up. As the demand increases, as the coal availability increases, and you will find more and more PPAs coming forth as we tighten up on the regulations and ensure that you know, the DISCOMs buy power through long-term mechanisms. So then when the situation improves, then if you divest these assets, you will be able to get something near their true value. That is the idea.
I wanted to understand what happens to spinning reserve, which is required to balance renewable and coal-based power.
Yeah. So we are working on flexibilization. Up till now, balancing has not been an issue as yet. But we are preparing for a time when balancing may become an issue with more and more renewables being injected. Yeah. So because of this, we are beginning the time of their tariff, so that the gas-based capacity also comes into play. And the gas-based capacity, along with hydro and the flexibilization, will together do the balancing.
All right, that's the Power Minister. Let's move on now. The health insurance subsidiary of Aditya Birla Capital announced its 7th bank assurance partnership with Karur Vysya Bank. Speaking to CNBC TV18, Mayank Bhatwal, the MD and CEO of Aditya Birla Health, spoke on a whole range of issues, starting with the financials of the company to the break-even target.
In our case, in the first year itself, we did close to about 35 to 40% of our business through banks. Given the fact that we have got a large number of partnerships, I think that it can, with the number of partnerships that we have now, and most of the relationships came through the year last year, so they'll have the full potential year now. So we'll be able to leverage the full potential this year. I won't be surprised if we cross 50% of our business in retail coming through banks.
As far as premium collection is concerned, for Aditya Birla Health Insurance for the month of April this financial year, it's down 26% on a year-on-year comparison if you go to see. And you become the only company which has seen sort of a degrowth in terms of the premium collection. What are the problems that you're facing as far as that particular aspect is concerned, and for how long do we see this underperformance on the premium collection level?
Yeah, so let me just break up that performance for you. So in the month of April, given the fact that we are focusing significantly on the retail side of our business, our retail business actually grew significantly, I think in excess of about 250-300% over the same period last year. In fact, bulk of our premium came from the group, from the retail side. In group is where we have decided that we will not play in the very price sensitive game, and therefore where you see the difference is because of the group business where we have decided not to play, and we like to increase our retail portfolio.
On the combined ratio level, where does the combined ratio stand at the moment, and in terms of the absolute figures, what's the underwriting loss that you're facing at this point of time?
Yeah, so last year I think the figure that we ended was about close to 175% combined ratio, which I think for a new company is what you would expect, because we will invest in creating infrastructure, we'll invest in creating distribution capacity, and the whole effort is to bring down that below 100% as we move ahead in the years to come. And so this industry is a slightly long gestation business where initially you need to invest, and as you start building up a whole bouquet of products to be able to reach out to large mass of consumers, and as your consumers, number of customers that you have in your book starts growing, that's when this business makes money. So, and which is exactly what we're doing, and hopefully given the fact that our business is all about creating better health outcomes, we should be able to do a better job than what you've seen in the industry.
Okay. As far as bottom line is concerned, what is the time target, and if it would be great if you could help us understand a time target on this part. How soon do you expect to turn profitable as far as the bottom line level is concerned?
Yes, so typically in the industry it takes about 6-7 years for any player to break even. With our model, we are hoping that we can actually improve on that.
To be specific, 1/5 of your total business comes from retail today, around that part if I'm not wrong. Right?
Last year it was about, we ended with 70% in Q4, and the full year was about 35%.
35%. In the next 2 to 3 years, could that go beyond 50% of your total business?
Yeah, of course. We like to take that to at least 75% plus.
Let's now shift our focus to a CNBC TV18 exclusive. Sources say that Amazon is likely to up its India investment target to $7 billion. Kritika Saxena has more details on this story. Kritika, fill us in.
Well, let me put this into perspective first. If you look at the investment plan that Amazon has made in India, in 2014 they first announced a $2 billion investment in the country. After that, they increased that by $3 billion in 2016 to $5 billion. So the current amount that we know from Amazon side is last reported 2016 figure of $5 billion. We now understand that with Flipkart and Walmart now inking their $16 billion plus deal in India, Amazon is not going to be left behind. Expect Amazon to bet big, and we learn that they are likely to increase that investment from $5 billion to $7 billion. So that's an increase of almost $2 billion into the Indian market. And what my sources are telling me at this point in time is that it's just an initial figure. We are likely to see Amazon increase that over a period of time. There's no timeline that they have set for themselves, but expect Amazon to start ramping up this investment very soon. And official announcement is unlikely, but this is an internal memo, an internal strategy that has been disclosed to only the senior management. And what we understand from our sources that a bulk of this is going to come into the e-commerce story, that is Amazon Seller Services. While some portions may come into Prime and other services, it's largely going to be the e-commerce service. So yes, get prepared for the big e-commerce wars. When we contacted Amazon for a comment, they said that they can't comment on rumors and speculation.
All right, Kritika, thank you very much for that. Well, before we take a break, let's tell you what the weather gods may be up to. The entire country is expected to be covered by the monsoon by the 10th of June. That's the forecast coming in from private agency SkyMet. Here's more.
Hi, this is Fawzia. Welcome to SkyMet Weather Report. After covering most parts of Karnataka and Tamil Nadu, monsoon 2018 has now started its journey towards Maharashtra. Weather conditions are already becoming favorable, with Konkan and Goa recording some heavy to extremely heavy showers in the last 24 hours. Ratnagiri recorded 116 mm, Karwar 73 mm and Mumbai 51 mm. Well, all thanks to the cyclonic circulation over East Central Arabian Sea off North Karnataka and South Konkan coast. With system getting more marked, moderate to heavy pre-monsoon rains will continue over Konkan and Goa, including Mumbai and South Madhya Maharashtra on Tuesday and further intensifying on Wednesday. However, these showers will occur during late afternoon or evening hours. Meanwhile, with no significant weather system, Kerala and Tamil Nadu would see subdued monsoon rains only. Now talking about northwest India, Heat wave condition will grip Rajasthan, while the weather across Punjab, Haryana, Delhi and Uttar Pradesh will be hot and humid due to easterly winds. Isolated thunderstorm or dust storm may occur over these areas today. Parts of East India, Bihar, Jharkhand, West Bengal and Odisha might see thunder showers on Tuesday. Rains would now increase over Nagaland, Manipur, Mizoram and Tripura. Similarly, in central India, scattered pre-monsoon rains are also likely over East Madhya Pradesh, Chhattisgarh, Vidarbha region of Maharashtra and Telangana, bringing in some relief from hot weather. That's all for now. For accurate weather forecast, stay tuned to scamitweather.com.
And of course, there is some news coming in on the cryptocurrency part of it. The ED has summoned Shilpa Shetty's husband Raj Kundra in connection with the Bitcoin scam. Utkarsh now joins in with the details. Utkarsh, hi. What is it really about and what is the ED really exploring here?
So at this point of time, Manisha, what we are picking up is that the whole reason why Raj Kundra is here is in relation to the scam of Bitcoins which was done by Amit Bharadwaj a couple of months back. Now, if you remember, he allegedly duped around 8,000 people with the tune of 2,000 crore rupees of scam. Now, it is not yet clear that was Raj Kundra a part of the scam or he's duped as an investor in this case. Because remember that Amit Bharadwaj scheme was really promoted by a lot of television artists as well as other artists as well. So at this point of time, we are still waiting for more clarity on what is the role which Raj Kundra has played here. Either he was duped as an investor or he was a part in the strategy or the marketing part of it. So we'll wait. We'll have to wait till he comes out and we get more clarity from the Enforcement Directorate on his role specifically.
Point taken. But sources also tell CNBC TV18 that the Thane crime part of the wing also is looking at some crypto scam which has been unearthed. Utkarsh, what details do we have from that one right now?
Yes, ma'am. So, Manisha, this is more of a fake cryptocurrency scam, you can call it. This is not a cryptocurrency scam. What has happened here is that two businessmen have allegedly gone ahead, made a fake cryptocurrency and then went ahead and made it public. They in fact launched an ICO as well in this regard. So, ICO is an unregulated means by which funds are raised into a new cryptocurrency venture. Now, more than 2,500 people invested in this. The prices of this cryptocurrency started from $3 and then kept going to $2,500. And what we pick up is that the software never allowed anyone to get money out of it. And now the absconders, the alleged people in this case, are not in the country. They're absconding. The main absconder here is Amit Lakhanpal, who is currently absconding, and Thane police is looking for them.
Oh, well, absolutely. So those are a couple of things that really are going on. Utkarsh, thank you so much for joining us and explaining all of that. Just to give you a sense, an ICO is an initial coin offering which the new startups or new projects actually use to raise funds. And this is given in exchange of a Bitcoin or an Ether. It, of course, is not regulated or not allowed in the Indian markets. But clearly, as Utkarsh was pointing out, there are more reasons, or rather, as he pointed out, there are a lot of people still doing that, which clearly is not regulated or not allowed by the Indian regulators there. But coming back from Bitcoins and cryptocurrencies, let's talk about the metal space, where we have seen good gains come in during the day today. You have the copper prices trading at a 6-week highs. You have lead at an 18-month highs. And this is clearly on the back of supplies dwindling and strong demand expectations going forward. Those are a couple of metals which actually have done quite well. And we have seen good buying continue in case of nickel, aluminum. So the whole pack actually is trading quite positive, starting right from the Asian markets today. Prathamesh Malya of Angel Commodities now joins us to talk more about that. Prathamesh, hi. What is your sense on the metal space, and is there anything that catches your eye on the buying side today?
Good evening, Manisha. Metal space has been really talk of town, right? Since last year, even this year, it has been the talk of almost the entire commodities pack. So saying that, I think in the commodity space, nickel is something which I would favor as a commodity, because there's a lot of positive sense that's been coming. Steel rally, and besides that, electric car vehicle seems to be story behind nickel. Immediate near-term targets for nickel on the M6 would be some somewhere around 1,100 is what we're looking at. But yes, a note of caution out there. If you want to play safe in the metals pack, I think I would bet my money on copper. I think copper is playing in the range of 460, 470. This is a particular range. So it is trading at 467 now. I think if you want to make money in metal space, I would better sell copper at around 470 mark, and 475 is the previous high. I would keep a stop out there and look for target towards 460.
All right. And is there a better pick that you have in the precious metal space as well, Prathamesh, or that's an area you would still want to just keep an eye on and not really invest?
Manisha, with the recent numbers of NFP and plus the interest rate hikes possibilities being on the rise in this June meeting, I think precious metals is not the space wherein you would buy at current levels. But my sense is that that precious metals would possibly see correction in the coming days. I think 30,750 and even 30,600 is what we're looking at as far as gold prices are concerned on the MCX, while silver, as far as silver goes, 39,000 is what we're looking at. So when at current market price, we would sell both the metals. I think both the metals we would not be on the buying side.
All right. And a quick word on the crude oil prices before we let you go. And it has been quite a slide. I mean, the last couple of weeks have seen 8% decline. This week has seen 2% decline yet again. So a third week of decline. How is it looking on charts? The fundamentals, of course, are quite volatile as ever. But at these current levels, would you look at some consolidation finally?
Yes, Manisha, I think the last conversation that we have had I've clearly mentioned about the inflection point when it was close to WTI was close to $70. I think a steep correction from there is what has already been factored in. But I think a little bit of positive move would come on. Short covering rally would definitely be seen. But then you should not be fooled by this positive move. I think there is still more downside in oil. I think 4,100 on Indian market is what we're looking at. If you're really looking at oil as a space you can sell on this particular counter, you should not be a buyer in oil again.
Point taken. Thank you so much for that, Prathamesh. So those are the strategies coming in from Prathamesh Walia on all of those commodities. But before we wrap up on the show, would want to address that flash on your screens, and that is about Food Minister saying that they have now finally sent the cabinet note on 8,000 crore package for the sugar industries. Remember, tomorrow is a cabinet meeting. Most probably sugar is on the agenda there. And if that is cleared, that is the help that, of course, would be coming in for the sugar industry, which is reeling under nearly 20,000 crores of an arrears and very low working capital because the banks haven't been able to really pass on all of those loans to them. So that, of course, is a very important one coming in, and the expectation is that we could see that passing as soon as tomorrow. 4,500 crores in soft loans for the ethanol production capacity. This is the part of 8,000 crores, of course, and the rest, of course, is part and parcel in sense of buffer stock creation, production linked subsidy, etc. So in totality, that is the 8,000 crore package that the Food Minister is talking about. Completely out of time on this edition of Closing Bell. Thank you for watching.